Hey, what's up, everybody? Happy Wednesday. It's Wednesday the 28th, and today we're going to be looking at three pairs. Before we get started, I want to do a quick risk warning. So, foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided in this video is for educational purposes only and should not be construed as trading advice or counsel. So here we go. First off, I want to take a look at the Aussie. This is my favorite trade right now, just based on the fact that we seem to be extremely oversold. We've had a strong down push from traders over the past 2 days or so, and this move has been pretty consistently down. So I like to make a lot of my money from pullbacks. So since we've had people get stopped out down here, the percentage of longs is going to be a much higher probability than short. And as you can see, RSI hit below 30 three different times, and a push to the upside tomorrow is definitely possible, even a very strong push. I think that eventually we could see up to the 100-hour moving average, which is currently at 1.04497. And so that's my first level that I'll be looking at. Just a little bit longer term picture. We have been in a pretty steady downtrend, so if a correction does start to happen, I'll start looking around the middle. So throw on a really rough Fibonacci. I'll be looking around the 1.57 area as my next possible target. So those are just a couple rough levels that I'll be looking at over the next couple days. I do think we could see some really strong buying from the Aussie tomorrow. We are at currently the 200-day moving average, so that'll just, again, it'll contribute to the buying pressure from the Aussie. And also the other thing that I like to see is a bullish divergence on the RSI for the daily. We didn't quite reach oversold conditions, which does worry me a little bit. I think that we could see a stronger down push eventually in the next couple weeks or so, but I do like a correction for tomorrow and the next day. So as you can see, this is a bad bar. This looks like a little bit of bad data, but we closed around here for the lows, and looks like we're about to close here in the next hour. The daily bar will close, and as you can see, the RSI has been making higher lows, so that is a bullish divergence, and it's pretty clear. So momentum is definitely going to be swinging toward the upside, and we might see a pretty large continuation of this upward pattern for the Aussie, which, as you can see, isn't exactly known for its downside activity. So I do like the Aussie trade right now, and just based on the fact that I think the euro might remain a little stagnant over the next couple weeks, I do like the Euro Aussie trade just as a cross. I don't really usually like to trade crosses, and if I do, they're usually not more than a couple days, so this will be a pretty short-term trade. But again, we've hit levels for a couple days where we've been overbought, and I think that a correction toward the downside, if the Aussie does continue to go up and the euro stays still, then the euro Aussie dollar should see a pretty strong correction to the downside. And as you can see, again, we have had a lot of buying pressure, so there will be sellers looking to reemerge after a pretty consistent down move, to say the least. The euro Aussie has been falling for about almost 3 years now, so that again is a really high probability play. Picking bottoms is lower probability, and so this might be just a correction, and if it is, targets I'll be looking towards are the 100 moving average. I'll throw on a Fibonacci here as well. I got some rough data. Looks like just below the 200 is also going to be pretty important. The 50 Fibonacci, in my opinion, is the most important level. So around 1.2625 I'll be looking at. And if we do start to see a correct continuation of the upside, I will still be looking to sell just because we are so overbought right now. And the last pair that I want to take a look at is the New Zealand dollar, which there is a blog about on Synergy FX's Forex Street site, which you can take a look at if you follow us on Twitter or if you look us up on forexstreet.com. FX Street, sorry. So, as you can see, we have pushed up from the lows on the 22nd of March, and the 100 and 200 are flattening, and so, or they have been flat for a while actually, and so a trend is likely to start in the future. The New Zealand dollar isn't known for very trend-based trading, so this is a little bit different from the New Zealand dollar. It usually likes to move, and it likes to move for a little while, and usually it is an upside again, as you can see. So levels that I'll be looking for are obviously the top here at 0.84194, and those are just a little bit longer term levels. If we do start to close below the 200 and 100, as well as the 50% Fibonacci down here around 0.796, then my bias will likely be reversed. But for now, I do like the New Zealand dollar for a pretty steady push to the upside, regardless of the fact that I think that the euro eventually will start to fall. I think this pair is pretty good at holding its own in terms of selling when the euro is selling, and so that has just been evidence over the past couple of years, and so the risk to the downside is far less than the opportunity we have to the upside. So those are the three pairs I want to take a look at today. Good luck trading them this week. If you want to have more information, follow us at Synergy FX, and we'll be posting updates throughout the week. Again, thank you very much for watching, and good luck trading.